Assalamualaikum warahmatullahi wabarakatuh. My name is Anis Zahra bint Ahmad Shukri, and today I'll be presenting about my part in this assignment, which are the introduction, background, current ratio, asset test ratio, and also debt ratio.
Bismillahirrahmanirrahim. Assalamualaikum. My name is Nur Fazlin binti Muhammad Fauzi and I'm from KSC 1105B. Today, I will present my part, which is debt to equity ratio, time interest earned, gross profit margin, and operating profit margin.
Hello everyone, my name is Nur Sakina binti Nizam, and today I'll be presenting on net profit margin, return on assets, return on equity, common size ratio, and lastly the conclusion.
In this current economy, it is very important for a company to deeply analyze their business performance in order to compete among other companies as well as to sustain in the industry for a long run. Thus, the company has to monitor their business performance in order to maintain a good reputation that is very important, especially to the investors. So how do companies analyze their business performance? Most of the big companies nowadays analyze their business performance through financial ratio analysis. This is a quantitative tool that is used by managers to collect all the data regarding the firm's profitability, efficiency, liquidity, solvency, and also market value. This is a very important criteria that investors will look up to when deciding the best companies to invest in. Apart from that, ratio analysis is also used by a company to identify the important element in financial and also non-financial data, as well as to find the correlation between both of these data. The idea of this method is to find the informative relationship and trends that are very useful for a business. To come up with an analysis, it is best to compare the data from the previous year to the current year to see the trends and the business performance. So here's a little background of the company that we have analyzed throughout the completion of this assignment, which is Hapseng Plantations Holding Berhad. This company has started up their business in Tawau, Sabah as a sandal shop in the year 1946. Hapseng means unity and success. In 1950, Hapseng has decided to expand their business further by exploring timber, rubber, cocoa, and oil palm sectors with the incorporation of the River Estates Limited. Since this company has performed very well in oil palm sectors, there are a lot of estates under Hapseng Plantations Holding Berhad, which are the Tomangong Group of Estate, Sungai Segama Group of Estate, Jeroko Group of Estate, Ladang Kawa Estates, and Pelipikan Estate, which are mostly located in Sabah. Ratio evaluates the liquidity or solvency of a company. It shows a company's ability to meet its current liabilities by using its current asset. A ratio of more than 1 indicates a surplus of current asset over its liabilities. In the year 2019, the current ratio for Hapseng Plantations Holding Berhad is 46.22 times, whereas the current ratio for industry average is 2.97 times. This has shown that Hapseng Plantations Holding Berhad has more than enough resources to meet its obligations as compared to the other companies in the same industry. Generally, a high current ratio indicates a favorable sign. However, if the current ratio is more than 2, the company has a possibility to experience a financial problem. The possible causes of the high current ratio is probably because of the inventory backlog. Besides, the company might also experiencing a slow payment from the account receivables. Other than that, it is also possible for this company to sell its fixed asset to other companies that has caused the current asset to rise abruptly as compared to other companies in the same industry. In order to improve the current ratio of the company, Hapseng Plantations Holding Berhad might have to reduce the inventory backlog as well as improve the payment collection from the account receivables. This company can also acquire more of fixed asset in order to increase the amount of non-current asset in the company. The asset test ratio for Hapseng Plantations Holding Berhad is 46.21 times, whereas for the industry average is only 2.32 times. This has shown that Hapseng Plantations Holding Berhad is more liquid than other companies in the same industry. This is a very good sign for Hapseng Plantations Holding Berhad, as it will not be experiencing any difficulties to meet its immediate obligation. To support every ringgit of its current liabilities, the company will have 46 ringgit and 21 cents of its cash available. The possible causes of high asset test ratio is because of the positive cash flow. A good cash flow of a company has made it easy for them to settle off the short-term debt within a short period of time. Apart from that, the disposal of motor vehicles that are no longer useful for the company is also one of the reasons for high asset test ratio. The cash received from the disposal can be used to settle off the short-term obligation. Debt ratio is a financial analysis to measure the extent of company's leverage. In the year 2019, the debt ratio for Housing Plantations Holding Berhad is 0.13%, whereas the debt ratio for the industry average is 32.21%. Generally, the lower the debt ratio, the better it is. This is because the company will have an easier access to borrow money from the lender if the debt ratio is lower. The possible causes for a low debt ratio is probably because this company has lesser debt as compared to its asset. This is a very good sign for this company, as their asset is at lower risk to be claimed by creditor in the case of liquidity.
Now, I will present about debt to equity ratio. Based on calculation that you can see here, it shows that company have lower ratio than industry average. This shows that the company have a good performance. The lower ratio of debt to equity ratio show that Housing Plantation Holding Berhad uses more equity and less borrowing or loan as the sources of financing. The possible causes having lower debt to equity are the company might have lower dividend payout ratio since that they have more return profit for expansion purposes. Other than that, it could be the Housing Plantation Holding Berhad is taking loan in the market at a relatively low rate of the interest charge. To maintain the performance of the company can optimum mixture of the sources of financing to lower the cost of financing. For example, the company can take loan from more than one financial institution that offer different interest rate. Throughout this way, the company can lower their cost of financing and it will make easier for them to pay off the debt. I will proceed to the time interest earned. As you can see at the slide, do not have time interest earned since the company do not have any finance cost which is interest expense for the current year. Possible causes that make the company do not have time interest earned is company do not have any borrowing or loan for the current year. Housing Plantation Holding Berhad have zero borrowing, which cause the company do not incur any interest for that year. Suggestion that can company take to make higher time interest earned are Housing Plantation Holding Berhad need to improve their time interest earned by having optimum mixture of sources of financing. This will result in the lowest cost of capital and hence maximize firm value. Housing Plantation Holding Berhad also should review their dividend policy since it will affect the firm sources of financing. The company also can improve their time interest earned by financing capital investment from an issue of the share or the retained earning. Now, I will explain about the operating profit margin. Based on the calculation show, the company ratio is higher than industry average. It shows that the higher percentage of operating profit margin is a good sign as it shows that the company has less financing risk. Possible causes that make the operating profit margin higher are it might be due to the low operating expenses incurred. The higher operating profit margin show that the company is good in managing their operating expenses. Next, the demand from the consumer play a big role that contribute to the high profit. When the sales revenue increase, there is a high possibility for the profit to increase. Suggestion that can make the company to maintain their performance are company can analyze their expenses ledger to find out the information on the operating profit margin. Through the ledger, Housing Plantation Holding Berhad can identify how much spending on the key area such as payrolls and material. If the operating expenses is higher than the previous year, this might that they need to cut off some expenses without affecting the business efficiency in order to improve the operating profit margin. Then, for the gross profit margin, as you all can see at the slide, it shows that company have higher ratio compared to the industry average. It means that the company has extra cash to cover other costs such as operating, financing, and other costs that are incurred in the business operation. Possible costs that make company have achieved maximum gross profit margin is Hap Seng Plantation Berhad managed to achieve an optimum sales during the year. This has led the company to achieve high gross profit margin compared to the industry average. Besides, the company is also have very efficient in managing their cost of sales. Thus, the revenue they receive is very high as there is no cost of sales for that year.
Net profit margin is the percentage of revenue left after all expenses has been deducted from the sales. To calculate net profit margin, we need to divide the net income by the sales. As for Hap Seng Plantations Holding Berhad, the net income is equal to Ringgit Malaysia 122,150,000 and the sales is equal to Ringgit Malaysia 279,300,000. It will result in 43.73% of net profit margin for Hap Seng Plantations Holding Berhad. Meanwhile, the industry average for net profit margin is equal to 8.07%. It shows that Hap Seng Plantations Holding Berhad has good performance than the industry as the net profit margin is higher than the industry average. The net profit margin of 43.73% shows that Hap Seng Plantations Holding Berhad is making Ringgit Malaysia 43.73 profit for every 100 ringgit sales that they made. The possible causes for the high net profit margin might be due to the low amount of operating expenses and financial expenses that the company has incurred. Besides, the company also shows favorable performance according to its operating profit margin and gross profit margin. Return on assets or ROA refers to the firm effectiveness in utilizing the asset to generate profit. The formula to calculate return on asset is by dividing the net income with the total assets. The net income for Hap Seng Plantations Holding Berhad is Ringgit Malaysia 122,150,000 and the total asset is Ringgit Malaysia 169,612,2000. Hence, the return on investment for Hap Seng Plantations Holding Berhad is equal to 0.72%. The industry average for the return on assets is equal to 5.08%. It shows an unfavorable performance for Hap Seng Plantations Holding Berhad as the company only received 72 cent return on every 100 ringgit the company has invested on the assets. The possible causes for the low return on assets might be due to the inefficient usage of the non-current asset or current asset or both. To improve the return on investment, the company needs to control the expenses. Secondly, the company also needs to improve their net income by increasing the sales. Return on equity measure the profit earned by the common stockholder from their investment in the company. The formula to find the return on equity is by dividing the net profit with the total common equity. The net profit for Hap Seng Plantations Holding Berhad is Ringgit Malaysia 122,150,000 and the common equity is Ringgit Malaysia 169,384,8000. The return on equity for Hap Seng Plantations Holdings Berhad is 0.72%. Meanwhile, the industry average is 9.51%. The ratio of 0.72% shows that Hap Seng Plantations Holding Berhad common stockholder will only earn 72 cent profit from every 100 ringgit of their investment in the company. Therefore, we could say that Hap Seng Plantations Holding Berhad has shown unfavorable performance as the company has poorly utilized their equity. One of the possible causes on the lower return on equity is the inefficient of generating the return from cash it received from the stockholder. Therefore, to improve the return on equity, Hap Seng Plantations Holdings Berhad can increase its productivity. Besides, they also can improve their assets turnover. Following are the statement of financial position extract as at 31 December 2019 for Hap Seng Plantations Holdings Berhad. The non-current asset for Hap Seng Plantations Holding Berhad consists of property, plant and equipment and investment in subsidiaries. The percentage for property, plant and equipment in the year 2018 is 0.05% and it has decreased to 0.03% in 2019. The investment in subsidiaries in 2018 is 94.51% and it has decreased to 93.81% in 2019. Overall, the total non-current assets in 2018 is 94.56% and it has decreased to 93.84% in 2019. The slightly reduction in property, plant and equipment might be due to the disposals of motor vehicles, and also the depreciation charge for the year for property, plant and equipment. Besides, the reduction in investment in subsidiaries might be due to the impairment losses for the year. The non-current liabilities consist of deferred tax liabilities. The deferred tax liabilities for the year 2018 and 2019 are both at 0.0083%. There is no difference for the non-current liabilities for both year 2018 and 2019. A deferred tax liability is a tax that is assessed or is due for the current period but has not yet been paid. It means that as for the year 2018 and 2019, Hap Seng Plantations Berhad has the same tax amount due for both years. From the common size of the statement of financial position, we could conclude that the company uses less borrowings because the value of long-term debts in relation to the total assets value are low. In conclusion, based on the calculation that we have made, we could say that the liquidity ratio for Hap Seng Plantations Holdings Berhad has shown good performance, since the current ratio and the acid test ratio for the company are both higher than the industry average. It means that the company will not have any financial difficulties in the future. Next, for the leverage ratio, the debt ratio of the company show good performance, and it means that the company will not have any difficulties to pay off their obligations. Next, for the debts to equity ratio, the company have lower ratio than the industry, and it means that the company uses more equity than borrowing or loan to finance its operations. And as for the times interest earned, the company have 0 times interest earned, since there is no interest expense incurred by the company. And last but not least, for the profitability ratio, the gross profit margin, operating profit margin and net profit margin shows good performance, since all three of them are higher than the industry average. And for the return on asset, the company has unfavorable performance, since the profit that they earn from the usage of asset is lower than the industry. And last but not least, the return on equity also have shown unfavorable performance, since the company has poorly utilized their equity. So overall, we could say that Hap Seng Plantations Holdings Berhad has good performance in 2019. Thank you very much. That's all from us.